Hello students, I hope you all are doing well. Let's move to another lecture in the series. In last lecture we tried to understand the term SSC as per the important concepts that we do have in Income Tax Act 1961. Today we are about to study another important term that we will be using while studying this paper from start till end. The term is income, and if we see the section 2 subsection 24 of Income Tax Act 1961 defines the meaning of the term income. This page I have purposefully aligned because this page is not like, from this page you're not supposed to learn anything. It is all about understanding. It may be seeming to you that ma'am is something teaching very theoretical, though it's not. One by one, as I would start with it, you would find it very interesting. I think so, and I hope you will find that interesting. So here we are about to study, like, I'm not beginning at the moment, I'm not beginning with the exact meaning of the term income. At this moment, I'm just telling you that for taxation purpose, how do we define income? Like, what are the principles on which income is defined? One reason for doing this is, like, there are varied varieties of incomes that we do have. The second reason behind defining these principles is that we actually do not have much of exhaustive definitions present in the Income Tax Act. Means that it does not precisely or exhaustively define the term income. It has mentioned certain things, that these are the things that are included under the meaning of income. Okay, let us begin. That what are the principles on which income can be defined for taxation purpose? First principle is legality. Legality here refers to the source of the income. Like, legality of the source is not the sole criteria of income. Like, you cannot say all the legal incomes are taxable and illegal incomes are not taxable. It's not like that. Legality is not the sole criteria of the income. The income, whether which is earned legally or illegally, it may attract the tax liability. So thus the income from any illegal activity, maybe smuggling or any such inhuman act, or anything which is not legal in the eyes of law, is taxable in the same manner, in the same way as the income from a legal business transaction is considered. Okay, so I hope the first principle is very clear. Then next principle is that it is not necessary that the income is taxed only on actual receipt. You have studied that in your financial accounting as well, that you record the income on the date it is occurred. It is received or not is a matter to be considered later on. Your credit sales and credit purchases are also recorded on that particular date on which they are being made. So in the same way, it is not necessary that the income is taxed only on the actual receipt. The income earned but may not be actually received shall also be taxable if it is derived from a source taxable under the Act. In last lecture, we have also seen the 5 basic heads under which we tax any income. So if that particular income, though we might not have received the money yet, it should be chargeable to tax if it is derived from any source which is taxable under the Act. Okay, next let us have a look that it should be derived from a definite source. Here, definite source refers to that an income of an unexpected nature, maybe like a windfall, is treated as an income for income tax purpose. So best example of that windfall can be winning from a lottery. You may be playing for lotteries for years and may not have won any lottery, but instantly at some point of time you may win a lottery as a windfall. So it should be derived from a definite source. And another point is very important, that it is not necessary that only the periodical receipts are income. Like, if I'm getting a salary on monthly basis, then only it is an income, because I'm receiving it on monthly basis. That income can be a lump sum receipt even under any of the heads. means it is not necessary that the income is periodical. Any unperiodical income means anything that you have received in the month of January, not necessary that it would be received in February, March, means any month thereafter or any quarter thereafter or bi-annually thereafter or annually thereafter. It may be quite possible that we have received it now and may be receiving it after 5 years, then may be receiving it after 10 years, may not be receiving it anytime in future, quite possible. So it is not necessary that only the we do not consider only the periodical incomes. It is like that any income which is generated in a particular financial year is taxed. Okay. Next principle is that receipt in the form of money is not the sole criteria of income. Means it can be in the form of cash or in kind. So the receipts in kind or any services can even be measured in terms of money and can be taxable as income. Quite possible. Now income should be received from outside, means some outer source, means a person cannot consider to have earned income by trading with himself. The goods transferred by a businessman from one of his shop to another shop or from one business unit to another business unit, both owned by him, it will not give rise to any income. So here I am discussing that what can be considered as income and what cannot be considered as an income. And here I am just discussing the criteria. I'm not telling that this is income and that is income. This is just giving you an overview that how the income is defined under the Income Tax Act 1961 under section 2 subsection 24. Now if suppose I receive a big amount of money from some source for any reason and I do not record it in my books of accounts, means in general these are the entries which we receive in cash, and maybe due to some I can use a word that is not appropriate source. Maybe that if as an academician I'm giving a favor to some particular person and getting some gift in kind or cash, totally wrong. And obviously I won't be recording it in my books of accounts because I'm a salaried person, and even if I have income from under other heads in even, I will not try to show that kind of an income. So any unrecorded receipts of income, maybe from business, profession or anyways, they all are chargeable to tax. Means it is not like that if you're not disclosing any income, if you're not mentioning it in your books of accounts, then you can skip the tax. It is not like that. So any dispute regarding the title of income which will not affect its chargeability, like if there is a dispute which is going on in court or maybe out of the court, if a dispute arises so as to the title of the income, whether it is valid or not, the recipient of the income will be taxed in that particular assessment year itself. Another one is important here, the gifts from the relatives like marriage gifts, birthday gifts. Somewhere or other they are not incomes in the hands of the recipient of gifts. But in the next slides where you will be studying the definition of income under section 2 subsection 22 of Income Tax Act 1961, you will see that there is a clause that beyond 50,000 they are taxed. Means up to 50,000 somewhere or other they are not taxed. You will get to know. Next is that if you have any revenue receipt, that is also taxable as income unless it is expressly exempt under the act. Okay, and in case of a sportsman who is a professional, the award received by him in the nature of benefit in exercise of his profession, maybe from the source of a government or not, it is considered as his income because he is exercising the benefit for his profession. So it would be considered as income from profession and will be chargeable to tax. There are many such points in this regard which consider like we can consider principles of income or so. Like I will discuss few more. Like it is not necessary that the source of income should exist in the assessment year. It may be pre, means beyond, before, which has not been disclosed, and disclosed now would be taxed. Or if you are going to receive some income in future, means it is not necessary that it is belonging to that particular assessment year. It may be an income from past, it may be an income from future, might be you're receiving now or may not be receiving now. Okay, now let us move to the next part, where we are about to study the income under section 2 subsection 24 as per the act. First of all, income includes all the profits and gains, maybe from business, from profession, or any other way. Income includes the dividend that you receive from being a shareholder of any organization. Next are the voluntary contributions which are received by a trust. Means voluntary contributions received by a trust are included in the definition of income, any kind of voluntary contributions. As such, the contributions received can be in the form of funds received by the associations, bodies. These all are considered as incomes. If I try to sum it up, like if a trust is created wholly or partially for charitable or any religious purpose, does not matter, it receives from income from which source, maybe voluntary, because people would come and donate to these organizations for the purpose of charity or religion basis. It would be considered as income under income tax act. Any institution which is established wholly or partly for such kind of purposes, if there is any scientific research association which is getting any such kind of voluntary contributions, if there is any gaming or sports association, any institution or fund which is established for charity, religion, maybe for education purpose, maybe for medical hospital, maybe an electoral trust. We hear many a times that this particular businessman, ABC businessman, has donated dash dash crores to dash dash party of I'm talking about political parties, their electoral trusts. See, at the hand of that particular businessman, if he is disclosing in his books of accounts, he may receive deductions, exemptions related to that particular charity or so under various sections. Means some part of his income as he has donated may not be considered as an income. It would be considered as an income, but it would come as deductions. But for that particular organization who's receiving that money from him, who's receiving that charity amount from him, is income for them, whatever it is. Any kind of organization related to education, scientific research, or charity or religion or any such organization. See, I have mentioned few sections here. I must say that this, like section 10, we will be studying in detail afterwards. At this moment, you must learn income is defined under section 2 subsection 24. Okay, let us move further, that what all can be counted under income. In today's lecture, we will be studying about this only, that what all comes under income. It is actually not a small topic. In general, a definition of income for one or two times, I would say, has appeared in the exams, uh, but as a short note only, not as a long question yet. There you will find numericals based on this that you will be studying in unit 2. From unit 1 also you will be having numericals, and that will be from residential status. From unit 1 you can have short notes on various terms like assessee, income, person, or so. And for sure I'm expecting a numerical from residential status, because every year you can see as a series, as a religion, I can say every year you are getting a question from residential status. Let's move further under the income of definition of income, that what all further exists in it. The value of any perquisite or profit in lieu of any salary which is taxable under section 17 is also income. Now see this point 5, this is quite interesting. Point 5 and 6, I could have asked you that what are perquisites. See this term, PERQUISITE. It is pronounced as perquisite, means some additional income, some additional benefit, maybe in cash or kind. And you must have heard about that the person gets DA from the organization, TA from the organization. If it could have been a live class, I could have asked you people only that what is a TA. A very simple answer, traveling allowance, you people would have answered. But when I ask students, as per my experience in the past, when I ask students that what is DA, very rare chances there that I get an answer. Think of, if you know, that's something brainstorming here at this point. DA, dearness allowance. Okay, this is defined in this point 6 if you see. Let's say point 5 first and then we'll go to 6. So any special allowance for benefit other than perk, is it? Any special allowance if an employee is receiving from his employer is also income for him. Any special allowance or benefit other than perk, is it? Included under subclause 3, specifically granted to the assessee to meet the expenses. See, whatever he is receiving that to meet the expenses, wholly necessary or exclusively for the performance of the duties of an office or employment of the profit. But it is considered as an income from him and it will be posing tax on him. Now let us see that what DA is. Any allowance which is granted to the assessee either to meet his personal expenses at the place where duties of his office or employment of profit are ordinarily performed by him, or at a place where he ordinarily resides, or compensate him for the increased cost of living. Means basically, if I would define DA in short term, it is that like basically amount of money given to an employee by his employer in order to meet the increased cost of living, or simply we can say it is given in order to meet the cost of living. So any allowance which is granted to the assessee means any person who is paying tax either to meet his personal expenses for office or for any other place where he ordinarily resides, or to compensate any such kind of thing, is like if he is getting that amount to overcome the increased cost of living, is considered as his income. I hope you people will be wondering that these all are incomes. Value of any benefit or amenity, whether convertible into money or not, means if you're receiving any benefit, if it cannot be converted into money, even then it is considered as an income obtained by a representative assessee or by the person on whose behalf such benefit is being received by the representative assessee, and some paid by the representative assessee in respect of any obligation, the profits and gains of any business of banking which is carried on by a cooperative society, etc. It's like that if you're receiving any money, maybe in the form where it can be converted into money, or in the form where it cannot be converted in the form of money, means you cannot sell it in the market and you cannot get money in return, whether it is obtained by the assessee himself or by his representative assessee, they are liable to tax in that situation. Let's move further. The value of any benefit or perquisite, whether convertible into money or not, obtained from a company either by a director or by any person who has a substantial interest in the company, means even if he is having high number of shares in the organization, even if he is getting any such amount from his company, or maybe by a relative of the director of such person, any sum which is paid by such company in respect of any obligation, but for which such payment would have been payable by the director or the person aforesaid, it will be taxed as income. Next, any sum which is chargeable to income tax under section 28 to 41. Basically, these sections define the income from business, profession and vocation and all that. These things will become very simple for you when you will be covering unit 2. Means that the time when we will be covering unit 2 and then you will come back to these slides will not be difficult for you, because these sections by then will be learnt to you by heart. So any income which is chargeable to income tax under section 28 or 28U or subsection 3 or 41 or 56, they all come under incomes. See next section, next point again is talking about one of the income heads only, that is capital gain under section 45. Any sum which is received or receivable in cash or in kind, or any agreement for not carrying out any activity. These days while during lockdown even we have been hearing these terms many a times, because during this particular period of time MHRD has actually initiated startups, and whensoever the term startups come, these know-how, basically the technology, patents, copyrights, trademarks, licenses, franchisee, these all are the terms which become very common. See, these restrict certain rights. So, if a person is receiving any money, maybe in cash or in kind, means any benefit which is given to him under any agreement for not carrying out any activity in relation to any business, is considered as income if he is receiving any money. We're about to get over. I must tell you here at this particular point of time that these points that I have mentioned as income, this is like not an exhaustive list, because Income Tax Act has not given any exhaustive definition. I'm just trying to include the things which are considered as part of section 2 subsection 24. Okay, these are like basically the things which may be signified, or according to its general or natural meaning is considered as an income again. Okay, next is that the points in profits and gain of any business in insurance which is carried on by a mutual insurance company or a cooperative society, which is computed with section 44, or any surplus which is taken to be such profits gains by virtue of any provisions in its first schedule. Next point is very interesting. Any winnings from lotteries, crossword puzzles, races including horse races, card games, or games of any sort, like we see Kaun Banega Crorepati or any Indian Idol or any kind of entertainment shows, through any way, may it be gambling, may it be competition, may it be knowledge, it is taxed. Any winning from any source is considered as an income. Next, any sum which is received by the assessee as his employer's contribution to any provident fund or any superannuation fund. Now, at this point of time, many students ask me while in live classes that what is provident fund. See, at this moment, you must keep in mind, because we will be studying it in detail in the upcoming classes, basically in unit 2 under the head salaries. At this moment, you can consider it as some kind of retirement benefit. Basically means that you receive the funds that are being saved whole of your life from your salary and from employer's contribution, and then after your retirement you get this benefit. So any sum received by the assessee as his employer's contribution is also considered as an income. Any sum received by a keyman insurance policy, including the sum allocated by way of bonus on such policy, is also an income. Now here question arises that what is a keyman insurance policy? See, keyman is actually that important person of an organization who plays some important role in the business. Maybe that he would be planning for the organization, maybe that he possesses certain technical know-how that nobody else in the organization may have, maybe that he is the one who knows the secrets, like we know about Coca-Cola. There are only few in the world who know the formula of making Coca-Cola that particular taste. So they as they uh, hold a very important position for a particular business, which we cannot sometimes express in terms of money, because the whole company may be based on that particular key man. So that key man gets insurance. So any received under a key man insurance policy, which includes a sum allocated by way of bonus on such policy, even is considered as an income. Do not worry, this is the last slide we are about to get over. I hope you are enjoying and getting to know certain different things from a different angle that you were just listening around you, and now you are having a look to that with a purpose that it is an income and it is charged under the Income Tax Act 1961, and it is particular income which is not charged as an income, which is not considered as an income. Basically, we are studying only those only which are considered as income. Now let us see further. Any sum of money or value of property which is received through consideration for inadequate consideration, without consideration, or you can say inadequate consideration by an individual or HUF. Means if you are providing your services to the HUF, in consideration of that, if you are receiving any money, that would again be an income. And even if you're getting that without any consideration or inadequate consideration, even then it is considered as an income. See, I was talking about gifts, an aggregate amount of gift or gifts received, whether in cash or in the form of property, exceeding 50,000 in a previous year by an individual or HUF from non-relatives shall be treated as income. See, from relatives, if a father is giving her daughter certain gifts in her marriage, they are not taxable. Here I am talking about HUF from non-relatives. That in that case it would be treated as an income. Now, gifts received by a firm or closely held company under section 56 again is considered as an income. Next point is again very simple. Any kind of remuneration which is received by a partner from his firm, which is allowed as a deduction under section 40 or so, means any interest, salary, bonus, commission, remuneration which is received by a partner is an income. Last is interesting, cash assistance. You call it a subsidy. Cash assistance may be in some form or the other, received or receivable, means make quite possible that you have not received yet, but it is due, you will be receiving soon, by any person against exports under any scheme of Government of India, is considered as an income, that you have earned certain money out of it. These 20 points, I'm telling you again, it is not an exhaustive list. This is just a suggestive list, that these are certain things which come under income, section 2 subsection 24. But I would suggest that this gives you an idea basically that what all is considered as an income or not. Thank you. Take care.